I've done many videos on PayPal. It is still sitting at $64 per share. Absolutely insane. In this very short video, I'm going to update you on my thesis for the stock, what I'm seeing in terms of the earnings, in terms of upside potential, and many different things. And yes, PayPal is facing a lot of competition, but even if PayPal grows revenues 6 or 7%, I could still see a decent upside potential from the stock, even though it went up from $58 to pretty close to $64 per share. But the stock has been flat, or has been down 43% over the last 5 years. But recently there has been an improvement with the chart. It bottomed around $49, $48. Now we're sitting at 64. We made some higher highs and higher lows. This is a very bullish pattern for the stock. And maybe the trend is finally changing, as there was extremely bad sentiment. It was one of the most hated stocks in the stock market. And this is slowly starting to shift. And that's what I see for PayPal. In terms of the last earnings, it wasn't the best. They beat revenues by 2%, but they missed EPS 11.6%. And this is one of the reasons why PayPal has been struggling. A lot of people are confused because guidance wasn't too bad. Everything else is improving. But why is PayPal flat? Well, I believe it's because people had very high expectations for the new CEO. He said, we will shock the world, we'll do all these things. And people got excited. It was really hyped up. And then it wasn't the case. These products they announced weren't the best, and people were expecting something a little bit better, and they didn't really get it, as it will take some time for PayPal to get back into high growth trajectory. For your Q1, I mean, some things have improved. Payments volume improved 14%. Revenue, we talked about, improved 9%. Transaction margin improved 4%. Non-GAAP operating margin 18.2%. Pretty amazing stuff. In terms of total active users, they declined a little bit. So this is one of the things that wasn't really good for PayPal. But even Venmo is starting to do better. It grew 8%, not the highest growth ever, but it's good. 17% percentage of total revenues. And Venmo is, of course, facing a lot of competition. And the whole PayPal business model is just facing competition. Apple, if really put their head in the space, they could take out PayPal easily. Same thing with Google. Same thing with many different players. But PayPal, I mean, it has been growing 6 or 7% revenues. And I believe this is all you need as an investor from this specific price to generate, pretty decent double digits annual return on the stock. But for the balance sheet is really not bad. They have 9.6 billion of cash and cash equivalent, 4.6 billion in short-term investments. The entire debt is 9.6 billion for long-term debt. So they have a lot of cash in the short term to do buybacks like they've been doing. They bought back, I believe, pretty close to 5% of the market cap over the last year or two. Over the last year, it was 4.6, 4.7%. So that was pretty good. And they have the cash and the flexibility to do a lot of things in the short term. Now, I have to say, the guidance was a little bit disappointing because non-GAAP EPS is only mid to high single-digit growth. And maybe this is PayPal being conservative, so they can easily beat those numbers and grow double digits. But I think myself and most people were expecting mid-double digits, 14 to 15% earnings per share growth. And this is not the case for guidance. And we don't know if this is PayPal trying to be conservative, maybe have more time to buy back stock at lower prices and surprise people to the upside, because they surprised them to the downside so far because of the high expectations of shocking the world and all these things the CEO said. So maybe this is what PayPal is doing. But we're going to find out very, very soon. And it's very hard to determine beforehand. But guidance was disappointing. We were expecting double digits EPS growth, and they put it mid to high single digits. In terms of how I think of the upside potential for PayPal stock, we talked about the free cash flow being $5 billion. And most of you know it's not really $5 billion because PayPal has a massive, you could call it stock-based compensation expense. If you take the stock-based compensation expense out of the free cash flow, it's no longer $5 billion. It's pretty close to $3.5 billion. So they're not really buying back. I mean, they could buy back with the $5 billion of free cash flow, but you also have to take the effect of stock-based compensation. So it's not really a $5 billion buyback. It's just $3.5 billion buyback. But taking the real free cash flow, which is $3.5 billion, and if you look at the market cap of $66 billion, this is pretty close to 5.5% free cash flow yield. It's not a 10% free cash flow yield. It's 5.5% to 6%. We could say 6% free cash flow yield for PayPal. Now, the free cash flow yield is 6% for PayPal, and for revenue growth is pretty close to 7%. Analysts expect 7 to 8%. I believe this is fair for a company that has a lot of competition. I think PayPal will still manage to grow 7%. Before, they used to grow 20, 22, 23%, 15%. I think those days are over. And maybe they were not going to get back there anytime soon, maybe after 2026 or something crazy, which no one can predict. But I believe 7.5%, or let's say 7% average revenue growth is fair. Now, assuming margins remain the same, we don't have a margin expansion or a margin contraction, we don't have a PE expansion or a PE contraction, everything stays the same. I'm seeing 7% on the top line, and I'm seeing a 6% free cash flow yield. This is pretty close to a 13% annual return for PayPal. So I'm getting 13% annual return for PayPal without getting a multiple expansion if the company does deliver on earnings and earnings start to grow again, double digits, and people get excited about PayPal. It goes from 15.5 times earnings back to 16, 17, 18 times earnings. Then the 13% annual return could be 15, 16, 17% annual return. The stock used to trade at a mean of 30 times at as high as 66 times. And I don't believe we're ever going back to 66 or 30 times. But if PayPal goes to 18 or 19 times, their new metric of their non-GAAP earnings and all that stuff, that would be a lot of upside potential. But on the low end, I'm seeing pretty close to 13% annual return on PayPal. On the best case scenario, it could be 15, 16, 17 because you have the upside potential of a multiple expansion or a margin expansion. If it does happen in the future, they do maybe some acquisitions, they find some synergies. There's a lot of things that can be done for PayPal. So yes, you could say PayPal is somewhat of a slow grower and there's a lot of competition, but as long as PayPal maintain their margins, maintain the free cash flow margins, and they maintain their 6 or 7% revenue growth, I'm seeing 13% annual return. I think this is a pretty good return for people that are looking for something like PayPal on the low end. On the high end with multiple expansion, could be 15, 16, 17% annual return. So I still like PayPal over here. I think PayPal is still an undervalued stock. I've been personally selling put options, $50, $55, sometimes a little bit below that. And I share them on YouTube. I think this is still my favorite way to do PayPal. But if you like the stock, I think it's a pretty good, opportunity at this price, even though the stock went up a little bit. And this is just my opinion on PayPal, not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.